This is John Kvale, and this is our June capital market and financial planning review. I noticed the last audio I did got a little bit hot on the microphone, so I'm going to try and keep it a little quieter this time so it doesn't get, what happens is it gets staticky. So those of you that are new, we welcome you to watch this is our monthly review. We do monthly reviews. A bit shorter. We do a review, audio video review of our newsletter, which is generally a bit longer. And this is our June capital market financial planning review. And I always say this, so since we do this in an audio video podcast, if you're driving down the road listening to this, keep your hands on the wheel, and I will give you enough audio that you will not need to look at the video. But here we go. All right, the first is our Back to Basics series. I think this is number 6 or 7. We've got one more after this, and this is about investing. Really came out well. I worked hard to keep this from a very high level, and the basic, most important part of investing is keeping it simple. Number 1 is save as much as you possibly can and start as early as you can. I know that's different for everybody. Both of those things are hugely different depending on chapters of life and how their chapters begin and what chapters they are in. But that's the basic, most important thing. The second most important thing is make sure that your allocation, and I talk allocation, it's broadly stocks and bonds, and there's tons of other within there, but that's not the point of this. But stocks and bonds are allocated in an appropriate method so that you make it through the inevitable slowdowns. Now, interestingly enough, the beginning of this year, we had headwinds in both stocks and bonds, so it was an extra challenge, and everybody's doing really good, and we've all made it through. But this video is more for people that may, there's a Skype, we'll see if that pops in, that may be new to the process. So, we'll see if hopefully we won't have to re-edit this for that Skype that just popped in. All right, so keep it simple. Make sure you're save as much and as early as you can, and make sure your allocation is appropriate. Bonds are generally slower moving, more steady. We call them their safe assets, and equities are the faster moving. I had to put this one in the Shady used car offer because in true musician-like format, you never know what's going to be popular. This is a true story, not my family, but a close family of ours, and we had a situation where someone was offered, the mom took her senior's son to a major dealership here in the Dallas-Fort Worth area, and they were told that it was totaled, and that they would buy the car from them, and it kept escalating the price, and finally the mom took it to another, just a local mechanic, and found out that it was not a good offer. And it was only about $50 or $100 to fix. So, trust but verify. Keep your guard up. All right. This didn't make it. This last part is capital market comments. And this didn't make it into anything because the Atlanta Fed popped this research out literally the last week of the quarter. And the reason that I put it in here is because the capital markets really took it into just much greater embracement than I thought. Okay, it's bottom line, the Atlanta Fed does a gross domestic product estimate, GDP, gross domestic production, but the broadest measure of economic growth, and they revised it from +1 to -2.1 in the last week of the quarter. Capital markets immediately said, oh my goodness, we're in a recession. And if this is true, we are in a recession right now, which is interesting. Seems to be maybe a mild recession. This isn't a fall off the cliff recession yet. We'll talk more about this, but it had some very interesting effects, and that is, number 1, it put what's called a bid in bonds, moving interest rates down, bonds up. And now, as of late, it's really knocked oil prices down as well. I think some people maybe were caught off guard. More on this. It's such an early time on this, but it does really fit the slowing thesis, and we were really surprised by just how many people took note of this Atlantic Fed, and I put it on my radar now, and we're going to watch it. If capital market participants are watching it this much, we will watch it, because it's very easy to watch. Now, whether it's right or not is another thing. Those of you that are in listen-only mode, I'm going back to the top. We've got this to a 4-minute, actually 5-minute, 4-minute 53 video. We'll talk at you at the end of July. And thank you so much. Bye-bye.